Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Clint Brewer. Clint, how are you today?
Good to be on.
Oh, yeah, happy to have you. A lot of stuff to talk about, crazy stuff all over the board, from the moving gold and silver to the news, that Trump is suing Powell, to markets abroad, and just a number of different things on the radar. So, basically, the first thing I want to touch on, is the overnight news from the DOJ. I'm interested in knowing your thoughts on that, and where you think that goes, and if it's really as big a deal as we may think it is.
Yeah, I'll be honest. I have no clue the impetus for wanting to do that right now. So just the background, if you haven't seen the news, is the DOJ issuing a subpoena or threatening to indict or lobby criminal charges against Fed Chair Jerome Powell. They're linking it back to his testimony in the Senate and claiming that he misled or lied about the cost overruns for this renovation project that the Fed is doing to their headquarters. But the reality is that it likely stems far beyond that. And I think you and I were talking earlier, Larry. Like Powell himself came out after this news hit and released a video. And he, flat out called it, the pressure on linked it back to the pressure on the Fed to keep lowering interest rates, which was kind of weird. I mean, because it was very uncharacteristic of Powell to do something like that. I mean, he's such a, I mean, shows no emotion, is such a robot when it comes to these press conferences, never slips up. He clearly, looked emotional in this video he released last night. And so, and then you mentioned the knock-on effect of all this. I mean, we've got stock index futures are lower, treasury yields are pushing a little bit higher, but the real move has been in currency markets and what you're seeing with gold and silver. And I have some thoughts on that. I don't know if you want to weigh in and talk about your thoughts on what happened overnight and what it means for the markets.
Yeah,
But
well, I think the release by Powell was very, very interesting, okay, because it almost goes in the face of everything that he's doing but shouldn't be doing, which is cutting rates. He's saying the Fed, he was coming out saying the Fed is data dependent. They're going to wait. They're going to, they're not going to be told by the president what to do. But in my mind, the last two moves were done in just that format, to kowtow to Trump, because especially on the first move, they had no data because the government was closed. So they were cutting in the blind, okay? And I think it was to get, what is Powell out in May or before
four
May?
months, yeah, 4 months.
Right. So he was just biding his time to get the hell out, giving Trump kind of what he wanted. And then Trump went over the top, saying he didn't know anything about it, but he directed the DOJ to basically come after him. And my thought is, what I'm interested in understanding is, okay, there were overruns, whatever. Stuff happens. I'm redoing the bathroom in my house. The price right now is doubled. Okay. I don't know how. It is a joke, but that's what happens. They couldn't get this material. It took longer to do. Labor prices went up, So in reality, maybe he didn't manage the project as well as he could have, but it's irrelevant. I mean, it's irrelevant money in the scheme of money. And for Trump to go after him with 5 months to go or 4 months to go, where he's literally lame duck, and Trump is actually getting what he wants. The guy cut it the last two meetings.
Yeah.
I think this is like a personal vendetta against the guy, which is, for whatever reason, he has a lot of those. But I don't know where, I don't even think this is anything. Like, I think it's something because it disrupts the market. I think Powell, by coming out, literally laid it in the lap of the next guy, whether it's, Wash, Waller, whoever it is, that they've got to remain independent and not listen to the president. And I think that was the message loud and clear that he was putting out, as well as, defending the independence of the Fed. So the whole thing is rather disturbing and dumb. And it's literally what I call a waste of time. I mean, I don't know if you feel the same way. It's
Yeah,
like
yeah.
nothing.
For here, like, so there's a really, I mean, there's a huge risk behind all this. And first off, look, if they're going to issue subpoenas because a government program went over budget, there's going to be a very long list of subpoenas that follows this one if they're going to start doing that. Look, yeah, it's kind of beyond me why they're doing this. With again, there's 4 months to go in this term. And now, here's one other thing that happened with all this. After this came out, Senator Tillis, who is a Republican, sits on the Senate's banking committee. He said that he would block any nominee for Fed chair until this whole matter with Powell is cleared up. So it throws a little bit more uncertainty into the next Fed chair, and perhaps extends Powell's. I don't know how that would work with Powell's term ending in May, but another element of uncertainty. But I think the biggest thing of all is that, I mean, Trump obviously cares about the level of the stock market. I mean, stock market is a yardstick he uses to gauge, his performance of the economy, whatever, or his success. The biggest thing here in doing this is that it undermines global confidence in U.S. institutions. I mean, there is the U.S. trades at a premium to the rest of the world because of confidence and stability, perceived confidence and stability, I will say, in our institutions. And, whether it's legal institutions, monetary institutions, and, the Fed's independence and credibility have never really been, in my experience, under attack or under question like this before. And this is just the next thing. I think if you and you look at the market reaction, the biggest moves are in the dollar selling off and gold and silver just absolutely ripping. And so I think that goes to show that this move is shaking that confidence a little further, which comes at a bad time because, look, there's a third of all U.S. Treasury debt outstanding matures this year and has to be refinanced. A lot of this stuff was refinanced, or a lot of stuff was issued because of stimulus coming out of the pandemic. And interest rates, I mean, what did the 10-year bottom at around the pandemic? I mean, it was like 0.5%. Now it's trading at close to 4.2%. So there's 9 trillion in treasuries coming due this year. Like, I don't know why you would throw this kind of instability into the market when you're facing that. I know that's part of that's the demand to get interest rates, to try to pull interest rates lower because of that debt wall, call it, that's coming up. But again, the biggest thing, the biggest takeaway in my mind for all this is that it undermines confidence in U.S. institutions, and that is exactly the reason why you're seeing the reaction in the dollar and precious metals that you're seeing right now.
Yeah, but the dollar is actually like dollar euro and dollar yen. I mean, they're mid range. They're not busting through highs, So I don't think you're seeing it as much. But you're seeing, I mean, listen, I don't understand the gold trade. I mean, and it keeps going. And, listen, I know what I know what is going to happen. It's just a matter of when and whether you could stay solvent to catch the move. The beauty of what we do with the opportunistic trader, and how I trade is, like, listen, I bought puts in gold, okay, and I lost my money for right now, but they can't hurt me any more than has already happened, so it's defined risk, you know, trades with, defined amount that you can lose. So that's the way you have to play this market, especially, the way it's acting right now. And, you know, you have a day like today where it's up 100, one of these days it's going to be up like this and then down 100. It'll reverse 200 points. We will definitely have limit down days moving forward because the limit's only like 10%. I mean, gold is is up 7% for the year, and silver's up 20%, 20. I mean, for the year, after going up 70 plus last year. So it's an incredible move. But, there's a lot of undercurrents. And what I see just looking at the market like today, okay, let's parse out, forget where the S&P is and where NASDAQ is down, 50 and 70 basis points. Think about what came out. The Fed head is being sued by the DOJ. Okay, the world is in a tizzy around the world. Okay, there's no confidence in anything. There could be a strike in Iran any day. I don't think it's coming, but it's possible. And since I walked in this office at 7:30 in the morning, I'm not saying they're looking to rip the market up, but they're certainly not selling, and they're looking for opportunities to buy after going up every single day. So if this is the muted reaction we have to an indictment, okay, of the from the DOJ of the Fed head, which both of us agree, I think, is kind of meaningless. It's more of a, like a, thought on top, like that. It's just, Trump being Trump, but it's still just throwing more just nonsense on the market. And the bottom line is, the market just, digests this bad news. And, I think, we're waiting on this Supreme Court decision, which to me is utterly insane. I mean, I don't know if you feel the same way. I mean, this is months and months. Just put out the decision. Like, they have it. They know. Why didn't they put it out Friday? They know. They didn't have. What do they have to do? Spruce it up a little, put words in that, kind of deflect what the ruling is. Just put the ruling out. I mean, and the market will be just fine, whatever it is. But if they rule in favor of Trump, I mean, they're going to want to rip the market. And they'll be like, I don't, poly market's saying it's not going to happen. But if it does, I mean, that would be really, really interesting to see. You know what I'm saying? That he continues to press on and, whatever. But a lot of stuff coming up this week. Today, market closed at an all-time high on Friday. Pretty much everything but Nasdaq, and you know, I don't know. I don't know if you're looking at these equity markets and have some thoughts. But
Yeah, well, just really quick, I want to go back to the Supreme Court ruling really fast because I mean, that was supposed to be out Friday, and then they kicked the can down the road to what is it, Wednesday now that this is coming
Mhm.
out. Yeah, both Poly Market and Kalshi are right around a 20, call it a 25 to 30% chance that the Supreme Court rules in favor of the tariffs. So odds right now are that there's going to be a ruling against them. Do you kind of have an outlook for what the market reaction is going to be based
yeah,
on those outcomes?
first I want to back up to Friday because it's very. I don't know if people that are watching the podcast have seen, like, all of these betting sites are now on like Interactive Brokers and Robinhood. They call it the find outcome and whatever. But what I look at to price what I believe will be the move for the day is the at the money straddle for zero DTE, meaning today. You know, you do it with me, Eric does it with me. Sometimes it's right, sometimes it's wrong, sometimes it's in between. But what I thought was interesting on Friday, which, how, like, we were saying, Polymarket just knows, like, they had the election, Trump was 90% when every poll was like 50-50. But Friday, the straddle was like $42 coming into Friday. And if that was and we moved more than $42 on Friday anyway. But if there was going to be a ruling, you got to think the market's going to move more than 40 basis points or whatever. but they knew there was no ruling. Like somebody knew, and they were blasting this stuff. So that's what was weird. I went home and I talked about it on the podcast on Thursday a little bit. Friday, I have my AMA. So I talked a little on my Ask Me Anything show that I do every Friday, where you can write into feedback at the opportunistictrader.com. But that to me was the weirdest thing, that the market knew there was no ruling. I mean, they knew. Like we were, I have a buddy, he watches this podcast, I believe he's on today, but we were talking and we're like, you know what? He originally said they're not going to come out and it may be something else. And I was saying, oh, no, no, it's coming out. It's coming out. And then when I really sat back and thought about it and looked at the straddle, it was telling me it wasn't coming out. I do believe they're going to release it Wednesday, but we'll have a clue on Tuesday, pricing Wednesday, on what the market actually thinks and, you know, what what the outcome will be. And when you say to me, hey Larry, what do you think the market's going to do if they rule in favor of Trump and if they rule against him? And I got to be honest with you, I'm not really sure of the reaction that the market's going to have. If they throw tariffs out, it's probably actually good, for many, many, many companies. It's not good for Trump and it's not good for uncertainty. Okay. But it's actually good. And then if Trump wins it, it's kind of weird because he's then the king again on everything. And he'll put so many tariffs on, he's going to start just going ballistic. He's just been sitting back. So my thought to you is like, that's what I'm thinking. I don't know what you're thinking. I'd love to hear what you think if they rule for it and against it, and the reasons why.
Yeah, I don't. Yeah, to be honest with you, so like you could tell me right now the outcome, and I don't know if I'd want to bet on the market direction. Same with like a payrolls report. You could tell me what the figure is going to be on the payrolls number. I don't know if I'd want to try to bet on what the market reaction is going to be. You don't know what they're going to look at for the narrative. Right now, what I would say heading into this is I think I would actually take the other side of it a little bit because I think the market has come to terms with tariffs. I think the stuff around tariffs and the trade war have settled down, and the market, deeply cared about it about 9 months ago, and now they don't care about it so much anymore. And I feel like if they come out and they rule in favor, it's a victory. I see it's a victory for Trump, and so does he just kind of let it go, and we continue as is with nothing new happening. Versus if it gets struck down, then that's just going to create another element of uncertainty. I agree. I think it's good for the economy. It's good for domestic companies if they are struck down. But then, what's his, it injects another unpredictable element into the markets because what's his reaction going to be? How's he going to try to get around it? And so now you're injecting yet another element of uncertainty into it. That's how I would
Well,
be looking at it right now.
Well, it's interesting. I have a webinar coming up this week, and we're going to give people the stock that I believe is going to be the best stock to navigate in this landscape, probably for the next 6 months, potentially a year. Um, but what we believe is that if he loses, he has, I think it's section, I don't know, 232. Like he's going to be putting tariffs on anyway. And Besson already said they are. So I don't think if it gets struck down that they're going to stop in any way of continuing on with what they're doing to this moment today. So
So then
you know,
maybe it's just a complete non-event. If they uphold them, then we continue as is. If they strike it down, they find another avenue to do it, and it doesn't matter.
well, I think if they uphold them, the market is going to rally a lot. I just don't know how much a lot is. And that's just because it'll be put to bed and he'll be able to do what he's doing now and continue in the foreseeable future. Again, the betting odds are very stacked against that. Okay. Again, I don't know in a Supreme Court ruling how that actually comes out. Is it going to be a yes, no? Can he do it? Can he not? Is it going to be dissenting opinions? You know, what do they need on the vote? So, there's a lot of uncertainty that a lot of us don't really know about. But I certainly think if they rule in his favor, which I don't think they should and they will, but if they do, I think that's a shot in the arm for the market just because it puts to bed, all these people that are saying these tariffs are illegal and this and that. And you're now getting the highest court to rule on this thing. And it's really, it's really in his favor if they go that way. Now, if they strike it down, like I said, it'll probably be perceived as a negative, but then the market might rally because if you really think about it, if they're putting the screws to him and now there are no tariffs, I mean, tariffs between me and you, my thought is they're a complete negative for business. They've been a distraction. No one knows how to run their business. No one knows how much the tariffs are or what's going on. So, I think that part of it is a big negative, but I think he's going to do everything in his power to keep the tariffs in. So, like you said, it may be a non event. I mean, we will get trading off of it for sure. But I think the most important thing is the price of the straddle tomorrow for Wednesday. Because, and I'm putting on a trade not for the opportunistic trader because it's a little bit too sophisticated, but I like selling options for tomorrow and buying options for Wednesday to take advantage of the ruling. I think that's an interesting trade. So I'm
You doing
looking.
that on the
I'm
S&P?
on the S&P. Yeah, I'm looking at that a little. But again, I don't know. I mean, I feel like they want to buy the market. Like the market's down now, but really it's down, because of first it's down because we're completely overbought. Second, there's probably a little bit of work to do. But, third, it's this silly stuff with Powell. But I mean, how many days, in this market, and we've been trading this for a while. These things don't stick for by tomorrow, they won't even be thinking about it.
Yeah. The, one thing here's what I think's interesting. If ignore all the headlines, take a step back and just look at the price action. And we were talking a little bit about this before the show started, but just the rotation in the Mag 7 names, the who's winning from day to day. But really, when you look back, the S&P and the Nasdaq have pretty much gone nowhere since the end of October. And a lot of that's because, yeah, several of the Mag 7 are weighing on the index. I mean, NVIDIA's still well off its high. I think Microsoft is well off its high. Meta is well off its high. These, because those top 10 names in the index are, 40 some percent of the S&P 500 and 50% of the NASDAQ. If they're not going anywhere, it's hard for the indexes to go anywhere. Meanwhile, it's actually the action under the hood has been, in my opinion, a little bit more bullish. Like you're seeing transports finally making a new high. Small caps started to move out to a new high. We'll see if they can hold it with today's action. Small caps could be especially exposed to the Supreme Court ruling on tariffs. That'd be one thing to keep an eye on. But the action, the rotation's been since the start of the year. I would say it's been tilted a little bit more bullish, which and you've seen the Mag 7 come in. Actually, for the first time since this bull market started in 2022, the Mag 7 accounted for less than half the S&P's calendar year return last year. I mean, there was still a significant source of return, but at least it was under 50%. I mean, they absolutely dominated in 23 and 24. They came in some last year, and they've still been lagging overall this year. I think that's kind of an interesting character change in the market, and maybe that points to opportunities to trade the average stock, so to speak.
But does that signal to you, like to me, that signals the beginning of the top of the market? There's no way without these names exploding can you have the moves that we've had? So I think what you're seeing is defensive posture across the market where, and this hasn't been 1 month, this is 6 months of this, 5 months of this, where these stocks, like Nvidia was the hottest darling at 212, 3.5 months ago. I mean, this stock off of earnings will probably be below 150 when they eventually put out earnings and the cheerleader burns his black leather jacket made of snakeskin. I mean, it can't keep going on like this. So maybe this is the beginning of, you know, a correction. I'm not signaling it like this minute today, but how can the market have such a good year if
Yeah.
the Mag 7 or the weighted stocks are not performing, and they haven't been. Now that could change on a dime. It could change today, but I mean that's what we're seeing. There's a massive overweighting to these names, and they keep upgrading. Like Palantir somehow looked terrible and then got upgraded by Merrill. I don't know what Merrill is seeing. Okay, the stock is up from 1 to 180, and it's
What
priced in my mind for full perfection. But again, you know, who
what do
knows?
you mean? What do you mean? What Merrill's seeing? Merrill sees investment banking business. That's what they see. They don't want to. They're not going to come out and slap a sell rating on a stock.
I know. Well, I mean, that's the unfair part of this whole thing. Is it's almost not right. But I think again,
Oh,
I think the market's going to climb the wall of worry today. They're going to try to rally it. They always do. And listen, I traded overnight futures, options on the S&P, and the market was skittish all night, all night. It looked really bad. And then you come in this morning, and since 7:30, I mean, it's not a big move, but there's no downtick. Like the panicky market is now gone. There's no panic. Everybody's okay. And once we open, they're going to buy, they're going to try to buy the market up. So, that's what I see. But I see a lot of, like, we have a long position in oil for the opportunistic trader. And last night, oil was breaking out almost to $60 a barrel. And then I went to bed and I woke up and it turned negative. So, I still like that trade. It's just, harder to come by. Um,
Yeah,
but
I think there's a couple things I would watch just specifically in today's action. I mean, the knee jerk before the market is to sell off equities, sell the dollar, and buy precious metals. I think, I think especially on the equity side, keep an eye on how we trend throughout the day and how we close. I mean, if we don't, I think you and I would both say, watch for the buyers to step in, watch for a bounce off the open, and maybe we don't close that week today if people are going to use this pullback as an opportunity to get in. But if we sell off and close on the lows, to start the week with all the events we got coming up this week, that could be that could be start of something a little bit more meaningful in terms of a pullback. Because I mean, you've got uh, obviously the stuff with Powell now, but you've got CPI that I think is out tomorrow. PPI is out this week. The Supreme Court ruling on Wednesday. So just watch for price to kind of hint at that underlying move, and I think you can use the move off the open today and track how we trend throughout the day and how we close. That would be something to keep an eye on. And then obviously with this move in precious metals, if you see any reversal off of these big overnight moves.
silver's the craziest thing I've ever seen. And it makes the move in the 80s look like a joke. It is incredible. It's up almost 8% today. I don't know if they have limit up. They always have limit down, but like 10% is limit down. I mean, this is a crazy move. I mean, and I'm
We
not
actually
I don't know who's doing it. Like it's a really weird thing. Who's doing this? like like it's every day. I mean, you listen, you've made a year's return in the stock market on average today in silver. And on the year you've had a good 3 years, okay? And last year you had a good 10 years. So the silver move has dwarfed the S&P over the last 15 years, maybe more in one move. I mean, it's crazy, but there's no seller, and the market just keeps going higher and higher.
Yeah, I mean, anytime, who knows how high it can go, but these parabolic moves always end badly. I mean, they call it the Eiffel Tower pattern. I mean, it looks like price climbing up one side of the tower and then it'll come back down. I mean, you look at the parabolic move that where silver topped out in 1981 around the Hunt brothers, and then again in 2011. The story always ends the same. We don't know how high it's going to go. And we actually, if for anyone interested, we were writing about silver in your e-letter today. Just some thoughts on some of the levers that are behind silver's gains and why. As with anything that sees that kind of a price move, it's probably going to end pretty badly.
I'm
Uh,
just what I'm thinking. I just so silver's up 20% for the year as we speak, basically. Okay. To get unchanged on the year, you're going to need two 10% moves, 4 or 5% moves. I mean, it is insane what is going on in here right now. In my mind, and I could be wrong. It's insane. Like, I think silver is going to be down a lot this year. It's up the last 3 or 4 years. This is like craziness. But the bottom line is you have to be careful because if you're wrong, like in a day like today, you can't enter the futures market. You'll get destroyed.
yeah.
Okay. You have to do defined risk options, and the vol is like 80 in there or more. So,
Is there
a
how would
limit.
you trade this? So like how so let's use silver. Like how would you look for a potential short entry?
I
Obviously,
mean,
yeah.
I wouldn't trade the futures, but I'd trade SLV. I'd look for an option down 10%, 8%, maybe even 15%, couple of months out, and I would buy that.
So
And I would sit in it, and once the move culminates, and it may be today, that it culminates the whole move for the year, who knows? But vol will explode. Like when we go down, vol's going to 200. I mean, it's just going to be limit down, limit down, limit down, limit down. I'm just telling you, I've
is there
lived
is,
through
is
this
there
stuff.
anything specific you would look at to try to time that trade? Like I look at what silver's doing, like you point out. I mean, it's up like 20% on the year. Like that's a train I don't want to step in front of right now. Is there something in the price action and the underlying market structure that you would look to with silver to try to time, when you would want to put that trade on?
Yeah, I mean, I would start. I'm starting a little bit today, and then as the trade is working, I would add. The only problem is now we just came off a, not a big deal, but we just came off 1.5%, and gold is. I think gold's going to be down today. It's up 90 in cash. I think it could be down today.
That would be a massive
Just
reversal.
yeah, well, listen, we're gonna have it. I mean, this thing is insane. It's at 46 over 4,600. On the futures, way above. So I don't know. 2 weeks ago it was 4,200. So it's up basically 10% in 2 weeks. And gold's only up 6% for the year. The better trade is silver, but silver was just up 7.5, and now it's up a little under 6. So I'm hoping it holds up. We're going to look to do something there small, look to do something in the product. And there's a lot of cross currents. Like the DAX is up 100 today. All foreign markets across the board were positive. ASX was positive. Hang Seng was positive. Nikkei was closed. All these markets are up. There's a few markets down in Europe, maybe one, but every other market's up. And I guess either they're not paying. they're not paying attention to us, so maybe it's not so bad. I don't know. Like, I would think that they would be paying attention to us. And it seems like the same trade over and over. Like last year, beginning of the year, fund flows were into Europe, out of the US. There was one point where we were down 15% and they were up 15%. And then we ended up 18% and they ended up 16%. So that spread narrowed 30% during the year. So there's a lot going on. You talked a little bit about the dollar, but the dollar, yes, it's very weak, but it hasn't done any type of move extension here. It's still inside the ranges, which is surprising. And, you got to keep an eye on that. And then, you got to look at bond yield, right? I don't know where it's sitting right now on the 10-year, but I saw it was a little above 420. Um, you know, I
Yeah.
don't know what you're
Yeah.
thinking
You know
there.
what's Well, yeah, I don't. So, yeah, I mean, bond yields have been slowly creeping higher. I would watch. We actually added, so we just did our monthly write up and analysis of trading themes for one ticker trader. And, I was speaking with you, we did add TLT back to our list of trading themes to focus on. So, definitely, we're anticipating more bond market volatility as the year goes on. I mean, definitely what's happening with the Fed and Powell will help inject some more volatility there. Big picture, I mean, I that TLT and longer term yields, I mean, they've been trading in this like sideways range, testing, at least on the 30-year, that 5% level several times, and just been grinding sideways. I mean, I think there's going to be a huge move in bonds sometime this year where you see a very meaningful breakout above 5% on the 30-year, and you see a breakdown on
Oh, 30
TLT.
year, 30 year. Okay,
30
30
year,
year.
not the
I,
10-year. I'm on
I
the
was
30. I'm on
like,
the 30-year.
that's a big move.
Yeah. So I'd watch that there. But you know what? To me, I'm looking through the markets. You know what's strangely quiet this morning with everything going on is Bitcoin. Like Bitcoin's just doing nothing. I mean, it's pretty flat right here. And they're the either
Hey, dude.
Bitcoin was going to get whacked to the downside because the risk on sentiment's taking a hit down with the rest of the futures market, or everyone's going to come out and declare Bitcoin as a store of value, and it should be holding up against all this news, and it's just kind of flat on the day doing nothing.
Yeah, well, because all the Bitcoiners went into gold. The memers are memeing in gold right now. But I'm really kind of bummed out because gold is coming in, and like I said before, it wouldn't shock me to see this thing come in a lot. And silver even more. Now silver's only up 5.5%, which is still insane, but it was just up 7.5%. So I'm hoping it holds the next 20 minutes, so we could maybe put on a couple of option trades in there. I mean, it's getting crazy. Silver's up 20% for the year in a week. I mean, it's incredible. It's actually incredible. And you know what's funny? Like when the move started at like $40, they were saying, "Oh, they need silver for data centers. They need silver for this and that." And now they're not even saying anything. Like they're not even. No data center could survive getting silver at $80, an ounce. I mean, it's the craziest thing I've ever seen. But we've lived through moves like this, and we will live through this move. But I think it's a good area in here to put on a short for a trade using options, not the future. Too crazy. You can trade SLV, to the short side. It's a $70 name, so it's not gonna, it can hurt you, but it's not, each percent is only 70 cents, so it's not gonna blow your head off. So you can do that, but do not touch the futures. And overall, again, I just, I mean, we got hit with you know negative news overnight, but really, like, is it really that negative. You know what I'm saying? It's the market's overbought and the market's ridiculous at these levels. It's very, very high, but the market always seems to get like a story like this and then it just goes up, and then people by tomorrow morning forget about it, and move forward. So, the one ironic, or not ironic, but the one interesting thing is like it's the same trade always. Like as soon as 7:30 rolls around, market becomes stable. Like overnight, like look at the move overnight. It was like this: up, down, straight out of the chute down. And then we've been sitting in a 20 handle NASDAQ range since 7:30 this morning. Literally. So I don't we were moving 100 we moved 150 points in 10 minutes last night. We opened up in the market overnight and then sold off. So I don't know. There's a lot to look at. Today's news is today's news, but I really believe the story is going to be the tariffs. And I think we're going to wait to hear that decision. Hopefully it comes. I mean, they say it is, right? But didn't they say it was coming Friday?
It was supposed to be Friday, and then they kicked the can down the road. Yeah, I don't.
But my question is, hold on one second.
Yeah, we got tariffs, but then I was actually going to ask you, Larry. Just you were doing your AMA, but we had all this news around the Fed when we had a pretty weak payrolls report on Friday come out, and then we've got CPI coming out this week as well. Do you think maybe they know something they don't like on the CPI number coming out, and so now there's all this news around Powell?
I would say, yes. I think the CPI is. I mean, I'm looking at the expectations. My question to you is, how could the expectations be this low? Do you know what they're looking for?
2.7, right?
2.6.
Two
What?
six. I thought 2.6 or 2.7.
Yeah, 2.6, 2.7. How? I mean, we were up at 3.2 on the last number, and it came in at 2.6. So what's this one going to come in at 2.2,
Well, so
2.1?
I can't remember. So that hopefully this will feature actually complete data. I know the last number that came out was distorted by the government shutdown, and I can't remember the percent of the underlying components where they just didn't include a value. Like they literally just assumed that the price was flat compared to the prior month if they didn't have an input into that. And so, and I know I think shelter was a very significant component of the CPI basket, and they assumed a flat increase for that, again because of the government shutdown. They weren't collecting the data. So it'll be interesting to see what CPI does this month, assuming there's a full effort behind estimating all the underlying components. When I look back, when I take a step back, I mean, what's been pretty incredible is that when you look at these PMI reports, so like ISM's a popular one. ISM does a manufacturing and a services PMI. There's these purchasing manager indexes. S&P does one. The Federal Reserve, their various districts do these PMIs for businesses in their districts, and they all they're trying to gauge overall activity within broadly speaking the manufacturing or services sector. But one of the things they do in coming up with that report is they're asking about underlying business trends. So what's employment shaping up to be? How does new orders look? And one of the things they ask about is prices paid. And following the trade war, the prices and tariffs, the prices paid component on most of these things just absolutely went through the roof. But they have a lead time. Like the prices paid, you'll see it move 3-6 months before it actually shows up in inflation, which would put us right around this time to where if you're going to start to see those tariffs things show up in the inflation reports, you would expect those to start to hit, right around this time. So I think this is a very important, week for inflation reports. We got both CPI and PPI coming out this week.
Yeah. I mean, listen, I don't think it means much. I mean, the numbers are coming in so much better than expected. It was interesting. The number on Friday, which again, it's what I talked about 10 minutes ago. Um, think about this. Okay. We had jobs on Friday. There is not one person in this country or any other country that's talking about the jobs number that came out on Friday. No one cares. And it's the same thing with this, you know, DOJ thing that's going to take forever and a day to ever go anywhere. They're going to freak on it today, and then tomorrow they're not going to care, and they're going to worry about the CPI and basically how good the CPI number is. And the funny thing is, even if CPI comes in at 2.9 or 3.0, or I mean, isn't that so much lower than anything we ever thought we get right now at this point in time after last year? And that's what I see, and it's funny. The Nasdaq for the whole show wasn't doing anything, and now sold off 20 points because we're getting ready to price the opening. So they got sellers on the opening, obviously, and S&P now down 40, and then the Nasdaq can't uptick. So they have net sellers. The imbalance is out at 9:15, and it's probably sellers. And then we'll see how the day goes. But I think we
What,
covered a lot.
what's your feel today? Would you use weakness at the open to sell a put spread, or wait and see if we get a
I'm
rally
gonna
to start?
wait. I'm gonna wait and see. I got to see the pricing on a lot of this stuff, and we'll see where stuff is looking. Um, I really think after we get through like the first hour today, we're going to be on to potentially CPI. And my question is, if it comes in 2.6, 2.7, does that rally the market? I mean, it did, I guess, the last time. Maybe this time it won't. I don't know. I mean, we had a huge rally. I don't know if you remember that.
Yeah. Yeah, we had a big, we rallied after the payrolls number. The payrolls number, I guess you could call it was it a Goldilocks figure, in that it wasn't not too hot, not too cold, not bad enough to ramp up recession fears, but not so good as to take. I think the pricing right now is 2 rate cuts for all this year, so it keeps hopes for more rate cuts alive. So yeah, is that what's the Goldilocks number for CPI? I don't know, because you can say, oh, should the market rally if it does come in around 2.6, 2.7? Well, that would be similar to last month's level, and it would be, the last time we were at or below the Fed's 2% target was like sometime in 2020 or 2021.
Yeah, but Clint, listen, as you know, the Fed is cutting rates with inflation above 3%. So that targeted number is irrelevant to anything that they're doing, to be
Yeah,
honest. I mean, it's faker than fake. Okay. I mean, I don't even know what 2% means. What's the difference between 2 and 2.6? They're still really, it seems very low, just my opinion. So I don't think we have an inflation. Listen, I think we have an inflation problem in general across the board through pricing on everything. But the way they're compiling these numbers, like you said, they're showing very little inflation, and they have the ability to do that. So, again, tomorrow, we're going to get to the point today, whether it's 12 o'clock, 1 o'clock, 2 o'clock, we're going to be positioning for that number for tomorrow. And the way that it's shaking out is if they put out a headline number at 2.8, 2.7, 2.6, or even lower, which would be insane, that the market has to react to that, and they're not going to be reacting to whether Powell got a indictment you know letter from the DOJ. Again, there'll be more news today on that, I guess, but I think the market is really down, yes, because of that, but also because, it's been up every single day this year other than one. And, we'll have to see, how everything plays out at this point.
Yeah, it's going to make for a. I mean, we still got 16 days until the next Fed meeting, but this is going to be a very interesting meeting with, especially with Powell's press conference. But yeah, till we get there, we'll see
Oh,
what.
I mean, I think the cut, if anyone thinks there is one, I think is off the board. Um, I mean, I think he gave Trump two freebies off of no data, and now he's pissed. Okay. He's like, I cut rates twice for you, Donald, and this is what you do for me? I mean,
Yeah,
I
right.
don't know. And how did,
Even after all this, right now, odds are 95% chance of no cut
yeah, for this meeting. Yeah.
for
I mean, they
January.
were pricing in a little, but there's no cut. But I think what's interesting, and I kind of want to wrap on this, is the new Fed chairman. Doesn't that put this guy in massive heat? I mean, because literally Powell is stating that the Fed needs to be independent, da 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 da, da, and then they're going to put a guy in who's going to do everything Trump says. And Trump doesn't even know why he wants to lower rates. I mean, he doesn't understand that he can't control the bond market no matter what. No one can. So, he's barking up the wrong tree. But, I'd be interested in closing to hear what you think, like, the next head of the Fed is going to be up against, because it's going to be pretty bad.
Yeah, like you said, I mean, whoever's in, it's going to be somebody that is willing to bend to Trump's will. But also remember that it's not one person that sets monetary policy and interest rates. It's a vote by a committee. So it's going to be it's difficult for one person to control the whole thing. But at the same time, there's been a lot of turnover in the board recently, and so that maybe that does stack the odds in Trump's favor of getting what he wants.
They can listen, they can control the whole thing. The head of the Fed can control it, and he always does, he or she, in Yellen's, you know, defense. But they control it. And I think we're like three and a quarter, a half. Like, where do they want Fed funds? Two, one and a half? Like, it's not going to do anything. It's just going to keep steepening this yield curve, you know?
Yeah, I think. I mean, that's the ironic thing is I think the more they cut, the more longer term rates are going to go higher. You know, whether it's concerns over fiscal imbalances, concerns over inflation, uh, running the economy too hot. You know, like I mean, look at last third quarter GDP came in at 4.3% annualized, and now if you look at the Atlanta Fed, their GDP tracker that's pretty popular, it's showing current quarter growth is at 5.1%. I think there's a quirk in that number. There's a big jump recently was driven by net exports, so probably a one off somewhere, but still, I mean, again, I don't know. The Fed can lower short term rates like they want, but yeah, I think you get the opposite reaction on the longer end of the curve, and we've already seen the yield curve steepening because of that.
Yeah. I mean, I think we'll see a little bit more, but we're getting close to the opening. I think we covered a lot of good stuff today. I hope we help people understand the craziness of what's going on in the tape right now. I do think that Wednesday is going to be big. I think tomorrow, you know, they can do whatever they want off the 2.5, 2.6, 2.7 number that's coming in from the government. But really, it's going to be this decision and how the market reacts to that. And we'll be back to everybody tomorrow. And I appreciate all for watching, and everybody have a great trading day. Thanks, Clint.